Welcome back to another episode of Capital and Context with myself, Mark Insley, and Sam Hallett as usual.
Good morning.
How are you?
I'm good. I'm busy. Good busy.
Yeah.
How was World Cup? How was Mexico?
It was nice. My frontier market research was great. Yeah.
I need to book some more research. Yeah.
Yeah. No, it was great. Mexico City was. It's good to see parts of the world and see. We're one to put on the research list. Like Mexico looks a place that's still growing and lots of development and stuff like that. Cool. So, yeah, no advice there, but yeah, it looked an interesting.
It's all right. I think we can give travel advice on this. I don't think the FCA are going
interesting. But it looked like there was a lot going on there. You know, I'd definitely go back, and yeah, it seemed lots of business and hustle there. So it was a good trip. Thank you. Yeah.
Cool.
Yeah. Good. This week's episode. I think we've sort of, tried to mix topics up, but let's get back to the meat on the bone, if we like, of what's going on in the world and probably what next. There's been some quite positive announcements. I know the last week or so. So where are you in your thought process?
So I think actually one thing that's been going on quite a lot this week, all month. All of the economic indicators have been coming out on the good side of things. So we've had inflation readings been coming in under expectations, which is obviously great from a central bank perspective. Yeah. We've been having PMI data, so that being the managers' survey data coming. When I say managers, obviously I mean kind of like in industry. Their survey data has been coming in very positive. Well, not very positive, but certainly to the upside of where it's expected. So that's obviously great. We've had quite a lot of good things on the economic calendar. Then, of course, we come on to a memorandum of understanding when it comes to Iran, which got leaked out over the last few days. You're going to have a go at me. I'm going to say today is Thursday, which is one thing I said not to do was to put a date attached to this. It's good to have an agreement and see that there's progress. From a political standpoint, if I'm honest, from a US political standpoint, this is a disaster. However, I think there's some bits in this which I think are, from an investment standpoint, promising. Okay.
Just to push you on those comments and why a disaster from a political standpoint.
Well, if you happen to have read your fair bit of history, and you've ended up having to read the odd surrender document and stuff like that, you will see quite often that it keeps on saying along the lines of the losing party undertakes to ... Losing party undertakes ... You read this, it keeps on saying the United States undertakes, the United States commits. It's probably more on the onus of the United States to do things than it is Iran.
Okay.
So, on a traditional standpoint, if I'm honest, it reads like the United States has lost this. I think when we're looking at this, I hate carrying paper to this podcast, even though I do it every week. I think the very key important thing that is agreed by both sides is they stay together with their allies. Key thing there, thinking Israel, Lebanon, etc. An immediate and permanent, keyword there, permanent end to the war on all fronts, including Lebanon. So that's great. And then, but as we move down through, we go to key thing talking about the Strait of Hormuz, saying about the United States will lift the naval blockade and prevent any interference or obstruction against the Islamic Republic of Iran and restore traffic within a maximum of 30 days to its full capacity. Then a little bit further down says, on the same topic, the Islamic Republic of Iran will immediately take steps to ensure the movement of merchant ships from the Persian Gulf to the Sea of Oman and vice versa is removed in 30 days to the pre-war volume. There's a bit here which is a little bit up for discussion, which is where it says take into account the need to remove technical obstacles. Now, that doesn't explicitly say that Iran can't do the whole charging a toll thing to go through the Strait of Hormuz. And I think that is a potentially real sticking point for what comes next, because yes, okay, they might not be firing missiles at each other, but the next thing to stop shipping going through is the insurance market starting to insure shipping going through. Can you see Lloyd's of London saying, yeah, it's fine, we'll insure you, but by the way, you've got to pay money to... Although the US is removing all sanctions, nothing to say there about the UK removing sanctions, so Lloyd's of London brokers have got to say, yeah, you can go do that, but you've got to pay Iran. Something there doesn't quite add up, so I can see that being a potential future sticking point.
You'd also said before around potential missiles being dumped in the strait or mines.
So that has come up. So shortly after it says about technical obstacles, it does say, and a neutralization of mines by Iran. However, Iran has publicly stated beforehand they don't know where all the mines are. Yeah. One thing that actually the UK has historically been very good at is mine hunting and mine clearing efforts. So that's one of the reasons why they've been quite standing ready to go in and help with that effort. But on the key fact which started all of this in theory, which was the
UK-based companies or the UK military?
As in Royal Navy.
Okay. Is that not a cost, or will they get funded for that?
No, that would be on the taxpayer, so to speak. But the key thing that started this all off in theory was, Iran, nuclear weapons, etc. The Islamic Republic of Iran reiterates that it will never produce nuclear weapons. Keyword there being reiterates. They haven't changed anything. It does say a little bit further on that they both agree that the fate of enriched material and the fate of all other mutually agreed nuclear-related issues will be adequately addressed in a final agreement. Yeah, but it doesn't necessarily say that you've got to get rid of anything or anything else like that. So I'm not entirely sure, with all these lives lost, anything has realistically been achieved with US's original aims. So that's what I mean. Politically, I think it's an absolute dumpster fire. There's also saying here about the United States will immediately after the signing of the MOU and until the date of lifting of sanctions, key word there being the lifting of sanctions, they also are committing to removing all sanctions on Iran. Bear in mind, some of those have been in place for like over 20 years. But they're going to issue waivers on exports of basically all the petrochemical kind of stuff, and including banking, insurance, transportation, and the like. So basically, not only has the US not achieved its war aims, Iran's managed to get complete sanctions relief out of this. So yeah, but that could be good from an economy standpoint. Lots more potential oil flows going. Reading into that, so
was there both ways? Was there sanctions both ways? So like, does the US also get cheaper oil?
It gets cheaper oil in the sense that there's more flows going, but let's not forget the US is now an oil net exporter. Okay. So on a balance of payments thing, that doesn't necessarily help them. I think what's quite interesting on this from an economic standpoint is like been looking now about 2027. It's almost too late now to be looking at 2026. What comes out of 2027? So been looking at how quickly can all of the countries ramp up the supplies that had to obviously cap wells and all of that kind of stuff. Can get up to around about 90% of flows by around about this October. So that's good. But we will still be drawing down on those strategic reserves in the meantime. There has been reports that actually 2027 could result in a bit of an oil glut, which could be, depending on which side of things you sit on, could be a good thing. But of course, we have to top back up those strategic reserves. The other thing in 2027 is we are still in the situation where we've had for a huge amount of this year all the fertilizer, etc., not coming out from the Gulf, and what's that going to mean for agriculture in 2027? Spoke to our external consult yesterday and was inquiring, because we decided not to go. We spoke briefly about agriculture funds, didn't we? And it's something that we didn't do off the back, thinking like, yes, but where in the agriculture stack is actually going to win out of this? Because everyone's going to end up with increased costs. No, from a company standpoint, there's no increased margin. And that's exactly what's kind of come out. The only people really want are like potash fertilizer people.
Yeah.
Everyone else hasn't really won, but they got
It's
priced in very
such a
quick.
specific thing. We can't really get exposure to that.
Exactly. Yeah, so that's kind of the roundup on Iran this week quickly.
Yeah.
I think when we look at, so last night, sorry, I'm going on a bit of a monologue here. So last night we had the Fed meeting announcement and Walsh's first presser as chairman.
What's his background?
So he was a governor within the Fed beforehand. So he's not a complete outsider. And it's interesting that Trump picked him because, although obviously he got picked on the whole thing of like telling Trump, yes, sir, I will reduce interest rates, that kind of thing. He actually was a little bit of, not like a full-on hawk, but he was a little bit tilted that way on votes in the past. So it was always a little bit surprising. But the presser last night, so first of all, headline news, well, the initial headline news is no rise. But what was interesting was in the press conference is that he made quite a lot of hawkish statements. So he's saying, look, I've been very aware of the fact that inflation's been running above a long-term target now for over 5 years. We have to rein this in. Hawkish statement. We're going to remove forward forecasting. Basically saying, look, we're going to look at data, what's here and now. We're not going to care about what we told you 6 months ago, which is kind of seen as being a bit more of a hawkish statement. He made quite a few of those. So the pricing in of a rate hike has now been put in this year. But I'll be honest, at the moment, the data isn't saying that it's nailed on. So I could see perhaps an opportunity to lean a little bit more for US govies, perhaps, for the remainder of this year. I can't see more than one hike happening, and the market's already pricing in one. So you kind of see that your downside risk has already been priced in there. Bank of England is today. CPI data came out this morning. Came in under, slightly under.
Okay.
Came in at 0.2% month on month. So annualize that out about 2.4%.
Yeah.
Nothing there that says we need to hike. Next month though is when the energy price hike comes in. That price is in when Iran happened.
Yeah.
So that will be a big one. You'll probably see that follow through for the next kind of like 9 months. But the thing is that so core CPI is actually doing quite well in the UK at the moment. The Bank of England doesn't look at core CPI though. So it's one of those things. It's like, how much do they concentrate on the transitory story versus the what is embedded? Bear in mind that services inflation UK has been running quite hot for a little while. I think we might be navigating this at the moment okay. Obviously, there's a whole discussion to go on with regards to IPOs and the equity market, but that's kind of the news and the economic kind of update for the week.
Yeah,
pretty big.
I think
one.
I saw that flash whilst away. What's the first that's come to market? Was it SpaceX?
It was SpaceX. Somehow SpaceX is now worth more than Amazon. Go figure. A company that is loss making is somehow worth more than Amazon. So one of our very good contacts, who obviously on this I can't name, I was at a meeting with them and others last week, and they wouldn't confirm or deny when they got asked point blank, "Are you participating?" But they kept on saying during their presentation, kept on talking about Elon fairy dust, which we all know is code for yes, we are doing it. The thing is that by no fundamental rational metric is either SpaceX or Tesla worth anywhere near as much as their market cap. They just aren't. However, the thing that you need to bear in mind when it comes to both those companies is retail investors and retail investor interest, which is going to be huge. And I think that's what's helped push it on over the last three best part of a week now. Yeah. When it got listed, like when the floating actually happened on Friday morning, after the shares got allotted last Thursday, it was worth just under 1.75 trillion. Keep on wanting to say billion. It's that big of a number, trillion. When I looked yesterday, it was over 2.25 trillion. It's grown 50%. Again, above this ridiculous IPO in the last few days. And that's just retail investors. Just what's been interesting, because obviously...
Is that in the S&P?
No, because it can't go in the S&P because it's loss-making.
Right.
So to be in the S&P 500, you used to have, I think it's 3 quarters of positive growth. So
where does it sit exchange-wise then?
Nasdaq.
Okay, so it's in the Nasdaq.
Yeah. So it's just crazy that. So yeah, obviously we've had with Iran and everything else like that. We've had quite a good, equity run last week. SpaceX has been going pretty much flat. My hunch, don't quote me on this, although I'm on the record, is that retail investors are selling selling Tesla to buy SpaceX. Right. So you're just getting that rotation going on there. But there's much talked about that maybe in the future the two might merge together. And but the thing is, though, the valuation is crazy. Keep on talking about, yes, but look at the flows that come down the line. Let's not forget, Elon has got quite a history of promising projects and things coming online. How many times has Starship been pushed down the road, and full autonomy on Tesla vehicles been pushed down the road? It's so I think that rationale is crazy. We got Anthropic coming up. They filed, but they haven't said anything about a date. And then we also have OpenAI. As well. And the fact that these three are coming to the market now kind of gives me a bit of a soft indicator that we are running very, very, very risk on at the moment. These people are very intelligent when they choose to list and stuff like that. If they see that, okay, the market is well and truly got the appetite to go for risk and help us have a full-on successful IPO, they'll go for it now. So that's one thing that's a little bit in my mind at the moment, is that much in the same way that like pre-2022, post-COVID, all of these big, particularly in the US, companies, they issued a huge amount of debt because they knew that they'll never get an opportunity to issue debt at frankly zero ever again. I think this is one of those moments you go, are we seeing peak? Have we gone past that point of things being rational? I think there's a lot of other parts in the US market which are well priced. You think you've got the earnings growth very much coming through on the infrastructure part of AI. That story's playing out well. That's doing, so PE ratios generally coming down, not because of the prices falling, but because the earnings are coming up. But yeah, one thing that we're looking at is where is the relative value in the world at the moment. When we were, as we've spoken many times on here, we were quite a bit over on emerging markets, which we kept that because we knew full well that in an Iran resolution story, that's the bit that's going to rally well, and it has. So that's been a good week. We're not far from talking about long short kind of funds to look at a way of a bit of downside protection again. I think that's my ramble.
Good. That was a long ramble.
It was.
Yeah.
This is what happens when I haven't seen you for 2 weeks. I need to catch you up on everything in my head.
No, thank you. Good. Yeah, I think that's good enough for this week. Unless there's anything else on your mind, I think that sort of got us through the Iran. Really good update there. We touched on some of the key IPOs, which I think you're right is a big factor in where we are in this cycle. So really good insights there. So I think we'll wrap that up as another episode, and
we're nearly at 20.
Yeah, no, we're doing well. Yeah, I think through the 10 is the knowing signal, isn't it? So yeah, we'll keep these going. We appreciate all the feedback from listeners. I know it's sort of generating a different type of audience for us as well. So appreciate all the comments that do come through, and we'll be back again next week. Thanks, Sam.
Thank you. Bye bye.